chart patterns combined with other technical factors to create a money-making trading strategy. An inverse head and shoulders pattern is just a head and shoulders pattern flipped upside down and looks a little bit like this. This is the one we're going to be taking a look at as an example, and just with every other pattern. I'm going to go ahead and put on market replay mode to ensure that I can teach this in the best way possible, as if you were actually looking at it on a real chart. So if we're looking at this on a real chart and analyzing it, we can see that we have a push down to a shoulder, which is actually right here. The reason I just did that, let me explain that to make it easier as well. Here we have a low, so here, draw it out, we have a lower. That being the case, this is what our pattern would look like. It would go to there, since that's the lower low. Then we have our first shoulder pushing up to this high right here. We then need what in order to classify it? We need the market to break through this low. Since we did break and close below and created a new low down here, we now have a left shoulder and a head. What are we looking for at this point? What would you expect us to be looking for based on what you know about the regular head and shoulders pattern we just looked up? Well, we want to see the market test this area. It might be hard to see there. So we want to see the market test this area right here. Why? Because this is the area between the bodies of this pullback and the wick of this pullback. With that being the case, this is the area we want price to test. How do we want it to test this area? We want price to push up and at least touch this area with a wick. We can see a body close in this area. We can see a wick go above it. What we do not want to see is price push up higher and end up creating a higher high right here in price compared to the previous high over here. So let's press play and see what happens. Right there. Do we have a test of our zone that does not close above our zone? Yes, we do. So at this point, what are we looking for? We already have the test of our zone. And if this pattern is just the opposite of the regular head and shoulders pattern, then we would make a zone out of the bodies of the left shoulder along with the bodies of the head of this pattern. This is the termination zone that we're looking for our next rule. What does that mean? That means we want to see price now pull back and at least touch this area. But what we don't want to see is price come all the way down and touch the head of the pattern. If we get a touch of the head of the pattern, then it invalidates the pattern. But as long as we get a test of the previous shoulder, then we're good to go to start looking for that break to the upside. So this is the area that we're paying attention to for our next rule. It is going to be between this shoulder and the head of the pattern. So let's see what price does. As we push up, we do push up a bit higher right here, but we do not close above our zone. So with that being the case, is it still valid? Yes, it is, and we're still looking for the test of our previous shoulder. So let's go ahead and see what happens with price. We push down, we test that shoulder, we now have a break of our midline zone. This is all turning into a valid head and shoulders pattern. So we're going to go through that really quickly. What we're looking for is the push down we have right here. We're looking for the first shoulder to create a pullback. We're looking for a break through that pullback to create the head of the pattern. At that point, we create a zone with the top of our first shoulder. That zone needs to be tested, but cannot be closed above. We then want to see a pullback from that zone to our second zone. The second zone is between the left shoulder and the head of the head and shoulder pattern. Once we get a test of that zone, we know we're looking for the break of the top zone for a valid head and shoulders pattern. What we don't want to see is something like this where the market comes down and then we touch the head of the pattern. That's more of a double bottom, not really a head and shoulders pattern anymore, so that invalidates head and shoulders patterns. But as long as we just get a touch of the zone, we get a breakout above our first zone, we have a valid inverse head and shoulders pattern. So those are my rules for each of the patterns that we learned. That takes care of mistake number one, which if you remember, mistake number one was not having rules around chart patterns. At this point, you should have solid and set in stone rules for each of these 2/4 chart patterns. And now what we're going to do is move on to actually adding other confluences and other conditions to this, so you're not trading chart patterns in the middle of nowhere, and that is called creating a strategy. So let's move on to creating a strategy. So,
Acabou.
anytime you're building a strategy around anything, not just chart patterns, there's a system I like to use that I created that's called CEST. And what CEST stands for, I know what you're thinking, I have great handwriting, is conditions, entries, stops, and targets. So when you're thinking about building rules around a full, not just around chart patterns, right? When you think about building rules around a full strategy by adding these confluences, you want to have rules for the conditions before you look for your actual entry. You want to have rules for why you press the buy or sell button. What is your exact entry? You want to have rules for where is your stop loss going to go. And ideally, you want to have rules for a target, but there are some traders, including myself at times, that in a nutshell, what you want to make sure is that you have rules for conditions, entries, stops, and targets, and that's what we're going to dive into now is conditions, entries, stops, and targets for the strategy. We're going to almost got it. Can y'all see that? There's a gnat in there for the strategy that you're about to learn. So let's get down to some charts and actually talk about